All right, so today we're continuing our lesson on checking accounts. So let's just do a quick review of what we've learned so far. So today we're learning how to use a checking account, what all is involved in using a checking account. And we've talked about different ways that you can pay, whether you use a debit card, a credit card, cash. And there's going to be times where you don't have the ability to pay with a credit card or with a plastic card like a debit card, and you might not have the cash on you, so a check might be an appropriate way to pay money. So a couple of the questions that we're answering: why should you pay with a check? How do you use a checking account? And how do you keep track of how much money you have in your checking account? And that question, the last one, how do I keep track of how much money I have in my checking account? That is what we're going to be focusing on today. But as we keep on going, we've already talked about two different students, Jason and Brianna. They're in different grades and they have different life circumstances. Jason is a senior. He has a checking account and a debit card. He wants to go into law enforcement or join the Coast Guard. Brianna, she's a freshman, so she's going to start a new job soon. She doesn't even have a bank account, and most of her income comes from her parents. But she does like to receive gift cards for gifts because she does know how to spend that plastic money. So then we looked at different type of deposits or money that can go into your bank account. You can take out or put in money through a bank teller that's in person, or an ATM, which are those machines that you see all around. You can put money and take money out through online or over the phone, or writing a check or using a debit card. We looked at how to write a check, all the different items that you need on a check. And then I gave you some examples of checks and how they are written. We also talked about a deposit slip. What is a deposit slip for? How do you get money into your checking account? Well, using a deposit slip can help you and help the bank teller put money into your deposit or into your checking account, or even a savings account if you have one. So you'd write the date, your name, your signature when you're taking cash. You have to write your account number and any of the information that you are depositing. So a check for $147.58. If you're keeping 25 of that, then your total would be $122.58 that you were depositing into your bank account, and you're keeping $25 in cash for yourself to have. We have not really talked about endorsement, but on the back of a check, you must endorse the back of your check if you ever want to keep that money for cash. So the pay to the order of phrase is always going to be written on the front side of the check. So if you were to go back a couple slides, you could see the pay to the order of, and it might say a company's name or it might say a person's name. So when you endorse a check on the back, that is the person who's receiving the check. The person receiving the check has to sign their name that they are indeed going to take cash for this. So a blank endorsement would just be your signature saying that, yes, indeed, bank teller, please give me the amount of money that's been requested on the front. A restrictive endorsement means that there's only one place for this money to go. So it might say for deposit only and then your signature. That would mean that you're not taking any of that money from the check out as cash, and all of it is going towards going into your bank account. So the bank, when they receive an endorsed check, they're going to match that endorsement with the payee on the front of the check. So if it is talking about a company and a person signs the back of the check, the bank is going to question whether you have authorization to actually take the money or to put money into your account. All right, so that was all pretty much review. So today we're going to look at the problem that Jason had keeping track of his checking account transactions. So I'd like for you to get your student guide out and read pages 14 through 16. Okay, read pages 14 through 16. That is going to tell you about the story of Jason and what problem he had. So I want you to pause this video and read pages 14 through 16, please. All right, so Jason had a problem. He paid out a lot of money in fees because he wasn't tracking his spending. So an account holder If you have a bank account, it is your responsibility to keep track of how much money is really available in your checking account. So let me show you how you can keep track of your payments from a checking account. And we're going to do that. We're going to keep track of our payments by looking at Jason's transactions. So there is a lot of information on this page, but this is a ledger. This is an account ledger of everything that Jason spent during the week. So it starts here. It says Monday, and it says this is not a transaction. This is the balance from the previous page. So in a checkbook, you have in the back of your checkbook, you have a balance check register. So the balance from the previous page where Jason was keeping track was $35. That means he has $35 in his checking account right now. He has $35 available to spend with somebody else, to either pay to a company or to pay to a person. So this first thing, DC, that means that this was a debit card payment. So on Monday, he bought a phone charger, and the payment minus means that he spent $19. That means compared to the $35 that we had, he now has $19 less. So he now has a balance after paying $19 for his phone charger. He has $16 left. So $16. Then on Monday, he also used his debit card to buy a pizza. And that pizza was $18. Now, Jason only has $16 in his bank account. So there's a problem here. He really isn't going to have enough money to pay for the $18 pizza that he wants. What's going to happen is if we have 16 and we subtract 18, we get -2. So he is $2 short in his banking account. The next thing that you see is a fee. So on Monday, after he paid for this pizza, there is an NSF fee. That means there are no sufficient funds. And bank managers or a bank company, if you overdraw or you take out too much money from your bank account, they will charge you a fee because they still have to get that money. They have to pay that money to the pizza company regardless of if you have it or not. And so they feel like that's not very fair. It shouldn't be our responsibility. So the next time that Jason puts money in, he is going to have to pay $30. It's not really a good thing. He shouldn't have to pay $30 if he was taking care and tracking his spending. So now not only does he owe $2 to the bank, he owes $32. So -2 minus 30 is -$32. He now is $32 less money. That's how much he owes to the bank. On Monday, again, he did another debit card charge for food. We don't know what it was, but probably it was some type of fast food. He paid $9 for that. So we take the -32, we subtract 9, and we get -41. So now he owes $41 to the bank. And again, because he made another charge that he didn't have sufficient funds for, the bank is going to charge him that non-sufficient fund fee, and that's another $30. So now, not only is he just $11 in the hole, because he was $2 short for the pizza and now $9 short for food, now he owes $71 to the bank. And again, there was a school fee that he paid for. Now, if you look here, this says 213. This is a check. So you would write the check number in as our code. So you remember that every check has a number. So this is check number 213. He paid that to the school. It was a $25 fee. So now he's $96 below what he should have. He doesn't have enough money. It's not a good thing. And if you notice, this was on Thursday. On Monday is when the bank charged him the no sufficient fund fee. So here, it was instant. When you pay with a debit card, everything is instant. The bank pays the money instantly to the company that needs it. When you pay with a check, that money will come out whenever whoever has that check goes to the bank to deposit it. So it looks like the school didn't take their check or Jason's check to the bank until Monday. And on Monday, again, there was a no sufficient fund fee, and Jason had another $30 fee that he had to pay to the bank. So that's a total of $90 in fees that he had to pay to the bank, plus the $2, the $9, and the $25 that he didn't have the money for. So now he owes $126 to the bank. You can see how quickly all of this adds up. If you see his balance, Jason's balance was different than the bank's balance because the $25 check that he recorded, that wasn't accepted by the bank. So here is your job right now. Jason, he paid out a lot of money in fees because he wasn't tracking his spending. So I want to see if you can do any better. So your job is to complete activity 5.4 in your notebook. It's called Keeping Track. And then you're also going to balance Zoe's bucks as well. So there's 2 activities that you're going to be practicing doing. Keeping Track, activity 5.4, and balance Zoe's bucks. Let's take a look at what those look like right now. All right, so activity 5.4 looks like this. It says keeping track, and the directions say record the following 7 transactions in Jason's checkbook register. Use actual dates for this week. So figure out what day it is for you. Here it is May 5th, and write the check number in the number code column. For other transactions, it says create your own coding system. Example, D could be a deposit, C could mean charge. Or P could mean payment. Find a code that works for you. You saw when we wrote codes on the side that we used DC for debit card. You can write the check number for a check. Find a coding system that works and makes sense to you. So on Monday, whatever today's date is, Jason opened a checking account with a cash deposit of $200. So for my code, I'm just going to write open. And today's date is May 1st, so that's what I'm writing. And the description of my transaction, well, this is opening a checking account. And we didn't pay this. This was a deposit. We added $200. So if we start out with 0 and we add 200, we had a balance of 0 and we're adding 200. Well, now I have $200. And actually, my computer was a little bit finicky when I did all of this. All of this needs to go up 1 row. All right, so just hold on while I write that in correctly. Okay, so that's what he did on Monday. He opened an account. And the very first thing that he did was he made an automatic withdrawal, probably using a debit card, to pay for personalized checks. So he opened this on Monday. He had to pay for personalized checks. And this was a payment. A withdrawal would be a payment that he is paying to somebody. So a payment would be subtract $20. So if we had $200 and we subtract $20, now we have $180 left. So I want you to pause this video and continue writing out the transactions for Wednesday, Thursday, Friday, and Saturday. If you're using May 1st, Wednesday would be May 3rd. So that might help you. Go ahead and finish the rest of this. All right. I'm going to show you the answer key to this. Now make sure that you are done with this on your own before you look at the answer key. So here is the answer key for keeping track. For the keeping track activity, this is what you should have. These are all of the payments that were made. This is the balance after each payment. And then at the very end, you should have a total balance of $201.65. It's really important to compare your checking account records with the bank information. And if you find an error, then you should go to the bank right away to discuss your records with them. I want you to complete Zoe's bucks, balancing Zoe's bucks, and that will be the end of your lesson. We'll go over that in the next video. Thanks so much for tuning in today.